Well, hello everybody. Blair Nightingale here. It is time. I normally say 6 p.m. Central Standard. It is 6 p.m. Central Standard. I'm actually out on the West Coast for the holidays right now. So coming at you from California coast, 4 p.m. and it's time for Market Monday. Thank you guys so much for being on here already. I can see a bunch of you guys out there joining us from Facebook, YouTube, some of you guys in our alumni group. So you've been through some of the Tradeway programs already. Today on Market Monday, how to find good trades and avoid the bad ones. Okay. And there's a little bit of, two sides to the coin there, isn't there? Because if we know some ways to find some good ones, then we're actually avoiding some bad ones just by doing that. But we're going to have three specific tools to go through today that are actually going to hit on both of those: how to find some good trades and how to avoid some of those bad ones. Susan, I can see your comment there. You're kicking us off today, saying hi. Hello to you as well, Susan. Always a pleasure to have you on here. Susan has kicked it off today. So you can join in Facebook, YouTube, wherever you're at. Drop a comment right there in the video. Be helpful right here if you want to ask a question, right? If you want to ask a question, of course, you can always drop that in there and I would be happy to get at that at any point in the broadcast, whether it's specifically about something I'm talking about or just something stocks, options, investing in general. I'd be happy to dive into that. I love the questions. I love the comments. Thanks so much, Susan. Anybody else out there that just wants to say hi, I appreciate you being on here. Go ahead, drop that in there, and I will definitely say hi back to you. Also, a lot of times we'll see folks if they have somebody else. In fact, Susan just did it. Somebody else that they want to share this broadcast with. You can tag their name in there, right? Sometimes, somebody can't be on live. So maybe they're going to just go ahead and watch the recording. You tag their name. It's going to send that on over to them and they will be able to see it. So appreciate that, Susan. Anybody else? I will continue to check back on this main page here from my side in case there are any questions that anybody has. Okay. That said, let's go ahead and dive right in. This is how to find good trades and avoid bad ones. Also, I'm going to give you three main points, right? We don't always break it down into 3 points here on Market Monday. Today, we're going to break it down into 3 points, but I'm going to start with a note, okay? A note, because we're not just going to hit the basics today, right? I can come in on Market Monday. I can say, okay, what's one way to find a good trade? You got to know patterns. You got to be able to find a good pattern, right? That's extremely crucial, but it's also something that we have covered pretty significantly. Now, we haven't gone into the intricate workings of each of the pattern, right? This is something that we cover in our programs. We're actually working with people who are actively trading these patterns. Sometimes, in fact, this morning in one of our community pages here at Tradeway, I was posting specific patterns, live market scenarios that I see out there, some at buy points, some not necessarily at buy points, but stocks that are in those patterns as an example of something that's crucial, foundational to our stock trading system. But we're going to assume a little bit of that today, right? We're going to assume that we've got some of that kind of stuff in place so that we're not just starting with the more obvious, crucial, but more obvious and basic aspects of it. Okay. We always need a system, a reason why we're trading what we're trading, and an edge, right? That's the point of a system, is to help us know. I'll say it this way: are there environments in the stock market where your money has more right? Right? Statistically speaking, it has more probability of making money for you and I than not making money, right? That's what a system helps us identify. And that's why I can say that trading is never gambling, going for it, or guessing, because we're actually using a system to help us identify where there is momentum. Of course, patterns is a large part of that. Now, it's not the whole part of it. That's not everything in the system that we use, but it is a big part of it. So I just wanted to say that off the top. We've got to have that in process, okay? In process, because it's something we've covered, and I want to be able to look at some other things today. But it is foundational, and we can't really do anything else if we don't have the foundation in place. Okay. So, that being said, we're going to do a little bit deeper of a dive today, but patterns, patterns, patterns. One final note on that. You say, Blair, I don't really know what you're talking about. I'm going to say two things. Because at that point, it tells me that you're brand new, which is great. We love that, right? I told the rest of the Tradeway team this morning, I was introducing myself to some new folks that are on the Tradeway team. I said I started in 2015, right? Winter of 2015. I realized I had been saying 2016 for a while, and my math was wrong. Go figure. In fact, that's part of the testimony. You don't really need to know a lot of math to do stock trading. Now, that's not a typical error for me, but 2015 is actually when I started. Brand new. Okay. Brand new in this. So if you're new today, I want to just say, hey, this is the place for you to start, right? This is the place for you to start because this is a place that is accustomed to. In fact, we get excited about new folks coming in and saying, I want to learn how to do this. I want to learn how to do this. We've got plenty of advanced students, but you know what? The majority of those advanced students, they're advanced because they've been in the program. They're not advanced because they came in that way, right? They started from scratch in so many instances. And of course, that's true of me. So I would just say this, if you don't necessarily know what I mean by patterns, remember you can always go back and watch previous episodes of Market Monday. Okay. You can always go back and you can always go over to tradeway.com. Take our step one, start your journey course. That's why we call it that. Step one, start your journey. It's right there on the main page, the front page, tradeway.com. You can sign up. It's a very inexpensive class. It's going to give you the whole foundation to our stock trading system. Okay. So that is what you want to do. It is inexpensive. It's worth way more than the cost you'll pay to get into that. And it's worth it for every person on here, every family represented on here to, at the very least, give yourself exposure to the markets, to Tradeway by taking that class. So head on over to tradeway.com for that. Okay. I say that because it really is the most practical answer if that's where you're at. And then, of course, remember, you can go back and watch those older episodes of Market Monday, as I said. Okay. So now let's move on to our top three, how to find good trades and avoid the bad ones. And like I said, little deeper dive today. So this is going to get into some tools that are going to help you. Okay. Now, the first one I want to look at here, I'm actually going to share my screen so that you have the ability to go there with me. In fact, well, I'll pop the link in the comments here in a second. I want you to stick with me for a minute. So the first one that I would say here, okay, of the three is look at the different sectors of the S&P 500. Okay. When you're looking for a specific trade and you want to find better trades, remember we're building on the system already. Okay. Finding good trades starts with patterns and using the three legs of the trading table that we teach here at Tradeway. Got to have all three legs. Got a table with three legs and you take one out. What's going to happen? Table's going to fall over along with everything that's sitting on the table. That's how it works. Got to have three legs. Here at Tradeway, our philosophy, we believe that you're going to give yourself the highest statistic. I should say it is statistically, but also the probable, right? The highest probable edge that we believe that we're going to get is trades that have all three legs of the trading table. Again, we teach that in our step one course. But on top of that, and in that, you'll learn we primarily look at the S&P 500. Okay, we look at stocks that are in the S&P 500, and we use the S&P 500 for market tone, right? And the S&P 500 is half of one of those legs, those three trading legs I just talked about. One of them is market tone, and half of that is the S&P 500. Remember, I said today we're not so much staying with the basics. Okay, we're looking at some other stuff here, so just stick with me. Ask any questions you've got. If you've got them, I'd be happy to answer along the way. S&P 500, which means that we can look at the S&P 500 and say, this is actually broken up into sectors. Okay. This is actually broken up into sectors. There are 11 sectors in the S&P 500. Let me give you an example. Technology is one of them. Okay. So what are the stocks that fall under the technology sector? Okay. How about energy? What are the stocks that fall under the energy sector? Okay. It stands to reason that if I have done my homework and I'm looking at patterns, okay, I'm looking at patterns that are in a specific stock, but the stock is in a specific sector. Not only is the overall market going to affect my trade, which is why we look at market tone, right? Rising tides tend to what? Lift all boats. The opposite is true as well. So we always look at market tone. It's what we take into account when we are placing trades. We want to place trades that go into the momentum of an individual stock, but also into the momentum of the overall market. Well, what if we could add a layer to that? Well, we can. What if the sector that I'm trading in was also moving into momentum? Well, how could I know if a sector that I'm trading in is moving into momentum? Like, for example, one of the things I just mentioned, energy. I'm doing a trade on energy, let's say, right? I'm not currently in a position in energy, to be clear. But if I was, what could I do? Right? What could I do? Well, I could go out and look at the energy sector and go, okay, the stock looks good. Otherwise, I wouldn't be considering it, right? It fits the rules for my system. So, a secondary thing to look at would be, let's go look at the energy sector. Now, how could I do that? Okay, now this is part of what I want to share with you today in terms of bringing up the screen. So, let's go ahead and share a chart with you. I didn't want to bring it up already because I like to uh, not distract attention there. But let's go ahead and look at this. There's a couple ways to do this. Now, first of all, we talked last week about charting software. Okay. So I'm making an assumption here that we have some way to look at charts. Again, already looking at the basics. For those of you, and I may say this a few times today, for those of you out there who haven't done the basics yet, I am aware, right? And I'm just gonna say I'm with you. If you say I don't have that in place yet, that's okay, right? This is all part of what we help folks do. But for today, here's our stock chart. So what can I do? Well, the first thing I can do, and a simple way to do it, is to go, all right, I can look at these spider ETFs. Now, this is just one way to do it, and there's a more comprehensive way to do this, but this is one way to look at it. Okay, I can go through here and I can look at these ETFs, which is short for exchange traded fund. You don't need to know what that means today, except to say that these are close representations, not exact, but close representations of each of the industries, the sectors that they represent. So I mentioned energy, right? What's as simple as this? Go to XLE, which is the energy sector, right? This tracks the energy sector. So what's happening in the energy sector? Well, it was making a beautiful pattern off of the 5-day moving average. Look at this. It gaps up, pulls back into the purple line, the 5-day, boom, hits a bounce, comes back, opens at it, boom, bounce. Same thing here, boom, bounce. Pulls back, gets another bounce if we were looking at it on this day, right? It would be basically doing the same thing that it had been doing. Well, what did it start doing then? Another pattern. Let's go ahead and highlight that, right? You can see some of these dotted lines here now. But let me go ahead and drop those two blue lines in there. Pull this down. What's it doing now? Essentially, it's channeling between those two prices, $57 and $59 respectively. So it's consolidating, meaning it had a very explosive movement, right? And now it's going sideways. So I might anticipate that the energy sector is going to continue to move between these two lines. You say, well, Blair, it's not going to continue to move between those two lines forever. And you'd be right. It's not. In fact, I'm glad I have this chart because it helps me anticipate when it's not going to move in between those lines. Well, how could I know that? Anytime it breaks them. So if I was looking at an energy stock and this begins to break below 57, something it hasn't done in well over a month, almost two, well, I shouldn't say a month. I should say about a month and a half. About a month and a half. So then I might go, you know what? The energy chart is looking bullish or it's looking bearish. Mean up or down, right? We've covered that on Market Monday as well. So I'm actually going to take that into consideration. If this chart's looking really, really weak, but I've got an energy stock that looks really good, it's at support, it's in a great pattern, doesn't necessarily mean I wouldn't trade it, but I may manage my risk differently. Several ways I can do that, but I might manage my risk on the trade differently because now I've got a little bit more information from the sector that that stock is in that helps me know the risks I'm taking on, right? It gets me a more specific view. How about something like this? XLF, right? This is the financials, right? It's moving down. It's making lower highs. It made a high, came down, tried to come back up, was actually lower than the previous one. Fell, tried to come back up, lower than the previous one. So on this one, we're actually seeing something like, oops, seeing something like this, right? It's moving down. Now, it's still a pretty bullish chart overall, but what have we been doing? We've been coming back into this 50-day moving average area. So if this thing breaks below this line here, but below that 20-day, I would expect this to make a move back at least down to the 50. That's something I would want to know. That's information I would want to know. Of course, you can just keep going through here. Of course, a very big one is technology. Now, this isn't the only way to look at technology, right? But this is something that you can do that's very quick because, like I said, it's going to cover those 11 sectors. So, what happened here? Technology went on a tear, makes a high, comes back down, comes up, and now it's matched that high. It hit the same high and pulled back a bit. So tomorrow, do we see it break up, make a fresh high, which shows us that the strength is still there? It's able to push to new levels. It's making new highs. It's almost like somebody does a workout one week, right? And then they give themselves time to recover. And the next week, they're stronger and they're able to do even more. That's what we want to see. We don't want to see a regression. Oh, the next week they did even less. Whoa, that means something's off. Well, that's the same way in stocks. Okay. It means that the bulls are losing ground and the bears are starting to take over. Now, we haven't seen a big drop here yet, so we don't know, but we do know it's at the all time highs and dropping. So that's something good to take into account if I'm going out there and I'm looking to trade a stock that's in the tech sector. Now, the next logical question might be, how do I know what's in what sector? Well, when we're looking at these ETFs, right, which is more of a broad overview, okay, it's a broad overview. That doesn't mean that every single energy stock is represented in the XLE. Okay, I want to be very clear about that. But knowing what is represented is as easy as coming over to this site here, and you can just go to this little pie chart and click on any one that you're looking at. And you can open it up, and it's going to tell you what's in that exact ETF. Now, keep in mind that even if it's not, you're looking at a stock that's not actually in that specific ETF, it's still indicative of that industry as a whole. Okay, some, just like the market as a whole, the S&P 500, some stocks are going to correlate more and some less with these with the indexes, and in this case with some of these ETFs. But if I'm trading some of the really good, solid, liquid companies in energy, for example, this gives me an idea. Hey, what's going on in energy? But I can also look at the energy sector itself. I don't have to use these ETFs, right? I can actually go to the energy sector, and there are even subdivisions down from there. We're not going to go into that stuff today, but I can look at very specific stuff. This all doesn't have to be really complicated, right? I've set up my charting here where there's a flow to the process that actually makes it very easy. And then with a little bit of time and practice, assuming again that we're not right at the beginning, because this isn't what we would do right at the beginning, but assuming that we're not, and we've got some time and practice, it's actually very simple to do. It's an easy thing to check. Now, there are different kinds of charting software out there, as we've spoken about previously, but there are ways to look at industry and sector on just about any, if not every, that I've ever used. And I've used multiple charting platforms out there before. So that's something to really think about when it comes to, Troy, that gorilla is moving sideways. Yeah, there's something to be said um, for using this as another layer, another way to indicate where you might go, wow, I was looking at an energy stock. I was going to trade it according to my system. And I see that actually the energy sector is right at support. Maybe the energy sector is in a beautiful pattern and it's right at support. I mean, let's go look at this for a second here. Let me go right back to the chart you guys can see on the screen. Now, how long does a pattern last? Until it stops, right? Maybe a little bit of an annoying answer to some of us, but it's true. That's how it works. So what happens when this thing hits $57? Well, it doesn't always bounce right away, right? We've had a little back and forth, but it moves up to 59. It comes down. There are definitely some indications that about 58.50, right? It came down and then tried and then went down and tried and then made it up. So there's a little hesitation there at 58, but really it hits 57, moves to 59. What happened now? Hit 57, and today we cleared the moving averages. Now you say, well, Blair, you think it's going to go to 59 for sure? No, I don't. Not for sure, because we don't know exactly what's going to happen. What we do know is the pattern is still happening. It's still working. It came back down to support, and now it's bouncing 57. They're not ready to let this thing go yet. So if I was looking at an energy stock yesterday or today, right? I should say Friday. Then you might have said, well, if market tone was in place, which today was more of a negative day in the market, just to put that out there. But if I had all three legs and I looked at this and thought, okay, I like that. Energy's lined up, right? That feels good. That would be another layer. And of course, there are others. And here, this one representing the market itself, which, if you haven't noticed, looks a whole lot like technology, doesn't it? It's interesting that the overall market and the XLK, or the tech sector, tend to look really similar. Tech is very, very big business right now. In all of our lives, that's the case. But across all businesses, and certainly in the stock market, very closely correlated. So that's a big one for sure. Okay, so looking for better trades, let's get another layer of, I'm going to use the word discernment. Perhaps that's not the right word here. I'm going to use another layer to help me confirm what my system has already been saying. It's not a primary indicator for me, but it is something secondary that I'm going to check, right? It's something secondary I'm going to look at as I look at a specific stock, okay? So I would want to know, hey, if I'm going to get into a stock and it's in a really weak industry, I'm either maybe not going to trade that, or I'm going to significantly change my risk profile on that position. I may still want to take the position based on the three legs of the trading table, but I want to take into account the information, because if that sector really starts to drop, then it's probably going to affect my play in many cases. Okay. Excellent. Let me jump in here. Make sure we don't have any questions on here. No questions today so far. For those of you who've joined since we fired off this episode, I just want to let you know you can always pop a comment or a question right there, Facebook, YouTube friends, right in the comment box. I'll keep checking back, looking for questions as we're moving through here. Happy to answer those, whether it's directly related to what I'm saying or otherwise. I've said that twice now. I just wanted to throw that in because I see we got a bunch more folks on here from when we first started. Troy says, I've noticed that the sectors are better than getting caught up in the weeds with news and market tone, which is also a little important. Yeah. So getting into some of those three legs of the trading table, remember what I said, rising tides tends to raise all boats. So with that metaphor, we go to market tone. What's the overall tone of the market? right? Are we in a buying mood? Or are we in a selling mood as a market? I want to try to sync my trading with that, right? I don't really want to work against that momentum. And the stronger that momentum is, the more I've got to either work against or is going to be working for me. That's what I want. Okay. Troy's commenting that in his own experience, he's noticed that looking at some of these more specific sectors can be a really helpful tool. So that's great to hear. Thank you for sharing that with us, Troy. Okay, so that said, I am going to move on to number two. All right, that's number one, looking at the different sectors. We looked at a couple of different ways that you could look into doing that. Of course, you can also, a Yahoo search, a Google search, and you'll be able to see what stocks are in specific sectors and how are they categorized. But of course, you want to make sure you have charting software so you can really get a visualization and have the tools that are necessary to really start to put this into action. Okay. Now, that's a tool, that's a tip that is really on the external, right? It's to do with the tools that you and I use as we're looking at our laptop or our phones, typically our laptops. And that's the primary function, or that's the bulk, I think, of what most people think of when they think of the work of trading. But if you followed us on here for any length of time, you've heard me say once or twice, maybe more, that actually the majority of trading, the majority of learning how to be a trader isn't really what happens with your tools. It's what happens in you and in me, right? Trading is really about what's going on inside the trader. So we would be off base today to say, how can we find good trades and avoid bad ones, and talk only about tools, charts, stocks, patterns, and not talk about the trader. So my number two on how to find good trades and avoid bad ones too is to look internally at the trader and just say this plainly. Okay. Do not trade with more money than you are willing to lose. You say, how does that have anything to do with finding good trades? If you and I don't have a predetermined risk profile, which is the fancy way of saying it, right? Really, what do we mean? We don't know how much money we are okay putting in a trade before our emotions start taking over, before we start losing sleep, before maybe we don't lose sleep or feel any emotions, but we've taken so much risk that we could decimate our accounts in just one or a few losses. And then we don't have any money to trade with, right? And that's important. I'm going to come back to that in a minute. But we take too much risk, whether we're aware of it or not. Okay. If we don't predetermine what's good for us as a trader and work our way into that, then we actually start setting up trades that, by our definition here at Tradeway, can't be called good trades. Okay. Now, again, I know some of you have heard me talk about this, but there's a bubble I need to burst. It's okay. I've had this bubble burst for me as a trader. I'm going to burst this bubble for you. I promise you, it doesn't take the fun out of trading. It doesn't take the potential out of trading at all. In fact, the quicker we align with it, the better traders we're going to be, and more quickly so, I would add. All right. So what's the bubble that I'm going to burst? You can make money in a trade and it be a terrible trade. You can lose money in a trade and it be a fantastic trade. Now, that's impossible. That statement is impossible to accept. I'm actually going to get rid of this for a minute. That statement is impossible to accept if our only definition of a good trade is I made money. Now, let me say something here. Listen, I'm not dumb, right? I know. What do we want to trade for? Profit. That's why we want to trade, right? That's why we want to learn. That's why we want to get better. That's why we want to do this. Of course, right? I'm not just being goofy. I get that. I get that. That's why I trade. But healthy trading like this, like I just said, too much money in the trade means that we actually have a process and a plan and we stick to it. Okay, we stick to it. Why is this important? Because note takers, I promise you, this is something you'll want to write down, right? This is something you want to write down. The quality of your trading only shows over time. It doesn't show in a single trade, right? The quality of your trading will show over time. What puts quality into trading? Knowing what to do and sticking to it. One of those things, don't risk too much money. All right. Dive in a little bit deeper on that. I said already, what if I put in 50% of my account? Well, why would I do that? Because I want to trade something and I believe that it's going to win, or I wouldn't take that much risk, right? Or I'm just gambling, right? Which is no long term strategy, it's random. Okay. If I put in 50% of my account, how many of those losses can I take? If assuming they're catastrophic, right? They don't have to be. We've talked extensively on Market Monday that they don't ever have to be, right? Part of what we teach you is how to manage risk. Why do people wash out of the market? Because they don't have good process, they don't have good rules, and they don't know how to manage risk. What if we could teach you how to do all three? What if we could teach you how to do all three so you can do what the professionals do? Why should they be any different? Because they've been taught, right? So that's what we aim to do. If I put in 50% of my account, I can only do that 2 times. And chances are I'm going to be pretty emotional about that. And when I'm really emotional, I don't think logically, right? Here's something I tell folks. Learning how to stock trade, it's not that hard. We're going to show you a system, even the advanced parts of our system, right? It's not really hard. It's not going to take you guys very long to learn. The people who really advance are the people who manage themselves well. Okay? And we help you with that as well. In fact, that's the most important part that we help you with. We help you do lots of other things too, like go out and actually find trades. We're going to do some of the things I'm talking about today with you live on webinars when the market's open. Our students do that with us every single day. You don't have to ever learn any of this stuff on your own. I'm giving you guys a 45-minute preview, but we go into a journey with you to make sure that you feel confident that you know how to do this stuff for the benefit of your own account and your own family. But in short, if we put in 50% of our account, chances are we're going to get pretty emotional, right? And Dr. Alexander Elder, full-time trader and author of many classic trading books, said a emotional trader is a dead trader, right? What did he mean by that? He just meant that the emotions are going to take over. The emotions are going to take over. Some of us, maybe not. Many of us, statistically speaking, it does. Why? Because we don't have a system. We don't have a system. So, one major thing I would say, don't trade more than you're willing to lose. We have a topical webinar coming up at the end of the month. It's free. You can all join me and Ross Query on it, one of our Tradeway coaches. We actually did part 1 of this webinar last month. And because there was such a popular and strong response on it, we're going to do another one the end of the month. I'll show you before we wrap up today how you can join us for that. But we asked all the Tradeway coaches, what's the number one thing you wish you knew? We actually asked each of them for the top 5. But the number one thing from all the Tradeway coaches were not risking too much money. So how do I have a good trade? How do I avoid bad ones? Don't put in too much money. Well, Blair, but then I can't make as much. Your trading will be measured over time, right? We're going to build over time. Trading already offers a highly accelerated way to look at building wealth. That's the potential of it, right? It has a potential to offer us a very fast track, comparatively speaking. But obviously, we've got to get the right things in place to move in that direction, to break into, I should say, to achieve those goals. So looking at building over time shouldn't depress any of us with this idea that it's going to take so long, because trading offers us pretty tremendous opportunity as it is. So we want to learn to do that correctly. All right. So that would be number 2. That would be number 2. All right. So recapping quickly, different sectors, right? That's another layer we can look at. Number two, don't trade more than we're willing to lose. I've done it. I'm just going to tell you right now, I've done it. I was new. I broke all kinds of rules, right? I did it. In fact, I did it at one time I can remember in particular where I couldn't sleep. That's how I know that rule. I had too much money for me, right? Too much money for me may not be too much money for you, right? I may be able to take a position and be fine, and you say, no, I would never do that, right? It could go both ways. But for me, I knew, oh, this is too much, right? Why did I do that? Because I was looking at what I could make. I wasn't looking at the risk. So that's rule number two. Now, going back to putting this guy up, right? Here's our charting software. I just want to have it in front of you. You'll notice on the right side of the screen there, I've got a watch list. Now, this particular watch list I have, as I mentioned at the beginning, it's got all those sector ETFs in there, right? It's got all those different sectors in it. That's something I'll go and look at. It's right there. It's very simple. All I have to do is go in and I can cycle through them as fast as I want. And boom, it gives me the chart. Now, what is number three? Pare down your watch lists, right? A little bit of a process. So let's just say you've got a bigger watch list, okay? I've got one right here, all right? This particular watch list has almost 450 stocks in it, okay? You can see I'm scrolling through. There's a lot of stocks in there. Do I go through that every single day? No. I will go through that list and then pare it down into a smaller list, okay? Into a smaller list. Now, there are several different ways we can do that. Okay, there are several different ways in terms of smaller list. Maybe I organize it by pattern, right? Maybe I organize it by sector. Okay. Maybe I organize it in a different way. There are multiple ways. Maybe I do it by liquidity, right? How tight are the spreads on the stocks or the options for our options traders out there? By the way, we do teach people how to trade options. Why would we do that? Because options give us the capability to potentially make money when the stock market goes up, to make money potentially, got to say that because we don't know, right? We don't know how it moves down, how it moves up, and moves sideways, right? The market can do all kinds of things, and I have tools to navigate that because I know how to trade options. I can also go and I can trade stocks that are like this one. Look at that beautiful pattern. I posted this on our community page last week. Netflix. Netflix is looking good, right? It's also $680 a share. Now, some of us, we can't buy much for shares at $680. Why not learn how to trade options and have tremendous leverage, also learning to manage the risk? That's the beauty of options. But I digress. I just get excited. I want to say options are awesome. So we want to pare down lists. So maybe options liquidity, for those of you who know what that is or how to use that, I should say. That's another thing that we could do. But the main point is I take a big list and I put it into a smaller list. And then from there, an even smaller list. You'll notice here in the watch list, I've got a go list. Okay. So that for me is a personal list of these are go list stocks. These stocks are at or very near buy points. They're at a place where I'm ready to go and set an alarm on my phone, right? Set an alarm on my phone to let me know if or when it reaches a specific buy point. Okay. So that's another thing, kind of a side note, but look at the tool. We've talked about this recently as well, looking at alarms. You can use that so that you can go about your busy life and not feel like you have to sit in front of the computer, right? That's not what we do. So set the alarm. You can get away from the computer. Ding, you get that alarm. That's the beauty of the technology. It lets you know, hey, Blair, I know you were looking at Netflix. It's now at the price that you wanted it to be at in order to look at getting in the stock. Then I can go ahead and I can either execute the trade right there from my phone, or if I have the ability, I can pull up the stock chart right in front of me that we're looking at here, and I'm able to go get into the stock. So getting into better trades, look at how we've looked at this threefold today, right? Specifically looking at the technical analysis, the technical price chart, right? That's That's the more fancy way of just saying we're looking at the patterns and we're making better decisions about our stocks that we're willing to trade. We're looking for a better edge, is what we're looking for. And that's what we want. We want to get a better edge. But then we're also looking at, well, what's going on with me? Am I making good decisions as a trader? And then we're looking at a specific process, the flow, where maybe once or twice a week, I'm going through my major list, right? And then from there, I'm going to a smaller list. And then my smaller list, I'm going to a go list. And each list down should have less stocks in it than the previous one, right? It shouldn't have the same amount or even close, right? We should be paring down big lists to a medium list to a small list, okay? You can see my go list there, I think it's 7 stocks in it right now. Some of that is that I haven't taken old ones out, but typically there aren't a lot of stocks in that list, right? That's pretty narrowed down by that point. And then I can set alarms, and your alarms can even have notes on them. Some charting software will give you notes so that you actually get a text. Maybe it's 2 weeks later. You hadn't looked at that stock for a little while. You get a text. It says, Blair, such and such XYZ stock has hit this, and you decided you were going to do this strategy on that stock that day. And hey, now we're getting somewhere, right? Now we're getting somewhere in terms of the process. So that for us, folks, is 3 ways to find good trades. Finding good trades isn't just about using the charts, but it certainly is. We do a lot of work on those charts. It's about doing the work on the chart inside the individual trader, which is such an important part of what we do here at Tradeway. Because, man, I'll tell you, and I know some of us may not be as interested in this. This isn't necessarily why you're interested in trading right now, but why not get better at trading, right? Go after your financial goals, whatever they might be for you, whether it's debt, whether it's retirement, whether it's blessing your family, blessing your church, blessing your community, whether it's things that you want to do for yourself, whatever those goals, or all of the above, right? We want to help you crush those goals. We want to help you get there. And this is an amazing tool that has very little overhead for you and I to start an at-home business and go ahead and do. The thing we need to do is learn how to manage ourselves, use the tools. So we looked at both today. Also going to pop in there, as I mentioned, the Zoom link for you to register to join Ross and I November 30th, end of the month, November 30th. We're going to do a free topical webinar part 2 as we look at the top tips that each of our coaches gave us, things they wish that they knew when they started trading. This could be something, if you're new, you can join us for free. It's going to be huge to learn these things right off the bat. And for some of you guys who've been around, this is going to be a good reminder, or perhaps there's something in there that you haven't heard yet. Plus, if that wasn't enough, you're going to be able to ask questions, right? You're going to be able to ask questions. I'll say this last thing before we sign off today. You know, there's somebody in our Tradeway community, been around the community for a while, not a coach, wasn't active trading, was helping out Tradeway. You know, God has called some people to come and help Tradeway in some ways where almost everybody is an active trader, but not everybody is. And certainly not everybody's required to be, but it's a very exciting opportunity. So almost everybody does it. And so this individual had started trading recently, and even in the community communicated to me at one point, I am so excited about trading. Sometimes it feels like, man, there's a lot I got to learn, you know, and it's exciting, but it can feel a little overwhelming. And I just want to say to you guys, that's the strength of working with the coaches and being in the program. If you feel a little overwhelmed today, the thing I want to remind you of is, what are those goals that you have, right? What are those goals that you have? What are those things that you've been praying for? Oftentimes we pray for the oak tree, and what we get is the acorn, right? And I'm not just trying to be, witty. That is so often how it happens. We ask for the oak tree, but we get the acorn, right? I 100% believe in radical, miraculous breakthrough from Jesus. That is what we are all about at Tradeway. If you guys don't know that, I'm saying that loud and clear tonight on Market Monday. It is a part of who we are. There's no reason, whether it's any area of culture, why we have to separate our faith and devotion to Jesus Christ from what it is that we do. And we don't do that here at Tradeway. You'll hear that we keep those things in sync because we want to submit everything to Him. And I know there's people out there that you have been praying for a solution, praying for a breakthrough. I would just invite you today to not allow the sense of process that you have in front of you to be daunting, but actually to be an adventure and a journey that you can go on with us, helping you every step of the way and moving you towards that breakthrough that you have, the goal that you have in your own life. This is how we do it. Sign up for that free webinar, and we will see you on November 30th. Head on over to tradeway.com. You can join us there at Step One, Start Your Journey. If you've not done anything with us before, we've also got memberships there for those of you who say, you know what, I'm ready to learn how to stock trade. I want to learn how to stock trade. We've got affordable options for you that are month-to-month memberships. You can learn at any level you want to learn, and we'll bring you into the program that way. Nancy says, thank you, Blair. And thank you to Nancy for being on. For those of you, we had a good crowd tonight. So I appreciate all you guys taking some time on your Monday night. We've just crossed that 46-minute mark. So I'm going to go ahead and shut it down. Thank you guys for being on. We are back on Thursday with a special announcement, which is going to be, I got to get my time right. It's going to be 2:30 Pacific, 4:30 Central Standard for the Stock Talk Thursday. Big announcement this week. So join us for that, and we'll see you guys next time. Thank you so much, and good night.